Every major news event produces a violent market reaction. Most traders either get caught on the wrong side or freeze entirely. But there is a specific playbook for trading news events that has nothing to do with predicting what the news will say, and everything to do with reading how the market reacts to whatever it says. Welcome to Chart Navigators. I am your chart analyst, and today is March 9th, 2026. In this video, I am going to show you exactly how this plays out on a real chart with a live example, entry, stop, and target. Stay to the end. The news calendar for today has several high-impact events scheduled. Let me show you which ones have historically produced the biggest market reactions and how to position around them. Nvidia is down 3% today. Before we go further, Nvidia is the hot name on the tape right now, down 3% to 177.82. This name is moving on news today. The key question is not what the news says, it is how the market is reacting. Is the move on high volume with continuation, or is it fading? That answer tells you whether to trade with it or against it. Keep position sizes disciplined. Now here is what you really came for. Here is the problem that is costing most traders real money. The traders who try to predict news outcomes and trade before the release are gambling, not trading. The market has priced in the consensus expectation before any scheduled announcement. The actual move depends not on whether the news is good or bad, but on whether it is better or worse than what was already expected. This makes pre-news directional trading a coin flip at best. The professional approach is to wait for the news to release, let the initial reaction play out, and then trade the sustained directional move that follows. Here is the fix. I am going to break this down into 4 clear steps that you can apply starting today. Step 1. Know your economic calendar. NFP, CPI, FOMC decisions, and GDP are the 4 most market-moving events. Mark them in advance and avoid being in positions you cannot exit before these releases. Step 2. Wait 2 to 5 minutes after a major announcement before entering any trade. The first reaction is almost always an overreaction. The second move is the tradable direction. Step 3. Trade the reaction to the reaction. If the market spikes up on good news but then stalls and starts to fade within 5 minutes, that failure to hold the initial move is your short signal. Step 4. High-impact news creates high-impact risk. On FOMC days and NFP days, cut your position size in half. Here are the exact rules. Write these down. Rule 1. Know the news calendar before the market opens. Fed decisions, CPI, and earnings move markets. Rule 2. Do not trade the initial spike. Wait for the first 5-minute candle to close after the news, then assess. Rule 3. Trade the reaction to the news, not the news itself. How the market responds tells you more than the headline. Rule 4. If the market moves against the expected direction on the news, that is a powerful signal. Trade the reversal. Let me go a level deeper on why this works. One of the most reliable patterns in news trading is buy the rumor, sell the news. When a positive catalyst has been anticipated for weeks, traders accumulate positions ahead of the event. When the event confirms, the anticipated buyers have already bought. There are no new buyers left. The stock immediately sells off because the only remaining participants are earlier buyers taking profits. The question is not what the news says. The question is who is left to buy after it is announced. Here is the data behind this. Research on market reactions to Fed announcements shows that the initial 5-minute direction is reversed within 30 minutes over 40% of the time. Trading after the dust settles produces higher win rates than trading the initial spike. Coming up, I will show you how today's top mover is reacting to its specific news catalyst and whether the setup favors continuation or reversal. Now let me show you a real example on the chart. The Federal Reserve announces no rate change, exactly as expected. SPY initially spikes up 0.8% in the first 30 seconds. Within 3 minutes, the spike completely reverses and SPY is back to flat. The failure to hold the initial spike is the short signal. Entry on the break below the pre-announcement level, stop above the spike high. SPY declines 1.2% over the next 90 minutes. Here is your complete checklist before you take any trade using this setup. News calendar for today is reviewed. Is there a high-impact event today? Fed, CPI, earnings? First 5-minute candle after the news has closed. Market reaction direction is noted. Is the reaction what was expected, or a surprise reversal? Screenshot that. Here is your key takeaway. Write this down. Do not predict the news. Trade the market's reaction to it. The second move after the knee-jerk is the real trade. Pull up the economic calendar for this week right now. Mark every high-impact event. Commit to not holding positions through any of them until you have a specific plan. We cover major news events live in Discord with real-time reaction analysis. Come trade news-driven setups with us. Link in the description. Have you ever been caught on the wrong side of a major news event? Tell me what happened and what you learned in the comments. If this gave you one concrete edge you did not have before this video, hit the like button and subscribe to Chart Navigators. Every week we break down one strategy using live market data, and we have a full price Action Foundations playlist linked in the description so you can binge the entire series in order. No fluff, no paid pumps, no nonsense, just actionable technical analysis. I will see you in the next one. Trade smart, trade disciplined,